In fact, I try not to make videos about him because almost all of finance YouTube is just people talking about Elon Musk.
Patrick Boyle is an ex-hedge fund trader and one of the biggest finance YouTubers in the world. Famous for his very dry wit, he has nearly 750,000 subscribers and his videos have got millions of views.
I look at, some of the big stocks within the S&P and you kind of think, well, I'm not sure that I want to own that one.
Yeah, what about crypto then?
What about it?
Well, how much have you got? I do think personally that you are probably one of the biggest finance YouTubers on the planet, and I think that's
slightly frightening to me to think.
Yeah,
because I always think of myself as still sort of a small channel. So.
Yeah, you certainly aren't. And we'll get into that. I think my favorite episode that you ever did was the one where it was like why Elon has to buy Twitter, and you were sat on a beach in a suit, and for the whole video I was like, is that a green screen?
That's the comments are just filled with, and there's someone analysing. They're like, well, you can see the actual beach in the background through his glasses. He couldn't have done that with a green screen.
I think the audio was so good that there was no like seagulls or whatever. Your audio was great, but I was like, you've packed a suit, gone on holiday, and you're sat on a beach just. Well, no,
I was on holiday and all of that kicked off, and actually, it's funny. It was a conversation with Darren from How Money Works, and we kind of joked that the thing should just be that I'm always in a suit, like no matter what, always in a suit. And so even like I've done sponsored videos, for like workout apps, and they're like, can you show yourself working out? And I'm like, I will, but only in a suit.
Well, did you see Lex Fridman's in the jungle? You know Lex Fridman, the podcaster?
Yeah.
And he's got his suit on, and I was like, Patrick did it first. I was like, I think he set the trend there.
Yeah, it was it was just a joke with Darren from How Money Works. And it just kind of turned into a thing where, I was in Cape Cod, and the topic came up. It was really interesting. It was kind of good content, I felt, for my channel, and I just thought it would be really funny to do that, and also not to say anything about it. Like not to in no way act like there's anything unusual. And the best bit was there was a guy in the background fishing, and when I watched it afterwards, I was just really hoping that he would catch a fish, because how funny would it be, like some guy fighting with some big fish in the back.
He's wrangling like a massive, or like a license plate or something like this. Yeah, and it's a great example of your dry wit as well, which I think people love, don't they? Yeah,
well, it's a funny thing because finance is often such a serious topic, and I think that often puts people off. Like they think, well, gosh, am I going to sit through a long drawn out discussion on real estate in China? And I think if you can lighten it up, do lighten it up. There's some topics that I can't, like if you're talking about a financial disaster in some country, you can't then go on and sort of make jokes about it. That wouldn't be right. But in many of the videos, there just is something kind of, you can find little comical
Elon Musk
bits.
Provides no end of
gags for you. A funny thing is that people say to me, you must really hate Elon Musk. And it's not really. He's, in fact, I try not to make videos about him because almost all of finance YouTube is just people talking about Elon Musk. But he is entertaining. There's no way around it. There's some people who take it really seriously. One of my favorites was what do they call that thing? The Vegas loop, and they built
Hyperloop?
Well, no, it wasn't. It was supposed to be, it's one of those things where it was sold as being amazing and it kept getting downgraded.
And then it was just hooking your Tesla on a hook and dragging it through a tunnel.
Yeah, it was basically a Tesla in a storm drain, with some, RGB lighting. And the funny thing is, there were some people, there's a news channel and the woman's like, this is amazing, and it's kind of it had been sold that the cars would do 155 and they were doing sort of 30 and they were getting into traffic jams and so on. And I don't know, it's funny, you know what I mean?
He has a habit of pitching something as revolutionary and then just basically creating something we've already got, which is subway systems, underground subways.
But worse, but significantly worse. There's a channel called Thunderfoot, and he joked that the biggest improvement you could make to the Vegas loop would to be put one of those little, those children's trains that they all sort of sit on.
They don't move and then they just go up and down.
Yeah, you could just put a little train system inside it and it would haul 10 times as many people,
Well, we're going to get onto the YouTube YouTube stuff, but I want to start at the beginning because you come from a traditional finance background, which is actually kind of rare in the finance YouTube space, which is funny. But can you take us back to why you started in finance? I think it was in the 90s, pre-dot-com bubble. Was that right?
Yeah. It was, I guess I started in 97. And, it's one of those funny things. I found it rather interesting. Like, at the time as well, there was a lot going on in markets. Like, it was pre the dot-com bubble, but there was just a lot going on. There were all these new companies. The internet thing was starting to happen. And actually, it was even just that computers had kind of come to Wall Street. And if you were, I would have been kind of 21 years old at the time, straight out of university. I knew how to do some stuff in Excel that the 40-year-olds in the office didn't know how to do. And so you sort of looked like a bit of a genius, and you could add a lot of value in the office. Right click, there's a chart, and everyone goes, how did he do it? And so I found the world of finance interesting, largely because I like the stories of the companies. I like even just trying to understand what's happening in the world, understanding how things relate to each other. Because that's really the complex thing is that, you often have competing technologies or just, new and old things, one replacing the other. And it's fascinating to work out, how does this work and how does it change? And therefore it then even leans into kind of studying up on history and so on, because, history isn't always the best guideline, but it's the best one we'll have.
It's the only one we've got to look at, right?
Yeah.
So you focus in the quant or quantitative side of investing, which is pretty complicated. Could you just define what quant investing is, first of all, please?
Quant investing it's a way of investing, but instead of accounting-based investing, which is what most of the world does, it's a way of just analyzing price movements, or even just, you can even do quant investing with accounting data, but you take the accounting data and analyze it and sort of try and prove statistically whether a relationship exists and whether a likely price move can be expected based upon the data you're looking at. So it's very much data-driven investing.
So you're analysing large data sets?
Yeah, well, it can be large or small. It can really be anything. Like, you can start out as simple as if someone says you should buy cheap stocks, you can look at the price-earnings ratios of stocks, get 100 years of data, and just look at whether you'd bought the cheapest half of the set or the most expensive half of the set. What would your returns have been? So it's really just trying to learn lessons from the data.
Yeah, and you said with Richard Coffin that with the plain bagel, you have to constantly come up with new ideas and research, because as soon as your idea gets out there, it's no longer an edge.
It's very much it's even that. There's more and more people coming to the market every day with, greater and greater skills, and they've got, new tools for analyzing. And so you're always looking for a new thing. There are some signals I have that still work and they're sort of 20 years old. That's kind of rare, though. A lot of the time, like, you have stuff, it's really good, it works for a while, then it stops working as other people work it out. Most signals, if you think about it, trading type signals, like anything short term, there's only so much volume that can be thrown at it, right? Because if you find a way of finding cheap stocks and you start buying those cheap stocks and other people start buying them, well, then they're no longer cheap. And so the market changes as you interact with it. And as other people find the stuff you're finding, they interact with the market and change it as well.
More complicated than value investing, would you say?
It depends. It's actually, it really was just a thing that I worked out that I could do. And I often say that to people is sometimes people come to me and they say, like, how can I do exactly what you do? And it's like, no, shouldn't do me. You should say, there's a big world of finance. I have certain skills that other people don't have. And if I lean into those, I can do well. And I'll tell you, the real reason that I got into the quant thing was just I was working in markets in the late 90s. I still had hair and looked awfully young. And the problem was that it was sort of hard to get promoted when you look like a teenager, which I did. And so I sort of thought, well, gosh, these older guys, they've all of this experience. How do I get experience? And it started with just reading a lot of books, because fortunately, in the late 90s, half of the Barnes and Noble was filled with investing books because the market was doing well. And so I could get all these books and read them. And then it really became a matter of trying to work out what worked and what didn't. And it was really as simple as sort of, I had moved from Ireland to the United States, didn't know that many people, had a brand new computer. And I thought, well, I can just test this stuff. Like if someone says value stocks are better than growth stocks or vice versa, I can take them on their word, or I can build a little spreadsheet. And so to me, I just had this huge urge to build spreadsheets to understand things. And then there's a point at which, at least especially back then, because you could only put so much data in a spreadsheet, you then learn like little coding tricks and things like that to add more data and understand things a little bit better. And then, you think like, gosh, well, I'm getting answers, but I need to know, how strong is this answer? Like, is this just an artifact of the data, or is it real? And that drew me into statistics. And, once again, you can go to the bookstore, get a load of books. I had studied statistics in university, but it didn't seem very real to me. It did, they often teach you calculations, but they don't tell you why you're doing the calculation. And so once I had a good use for the calculations, you dig out the books and you go, oh, this is useful. I can tell whether, I found a thing, but is this thing random or not, is sort of what statistics tells you. So
yeah, because in your book, you have this quote that I thought was interesting. Luck is a misrepresentation of the idea of probability. Many strange things, such as freak runs of luck or surprising coincidences, can be explained by probability. Do you think then that with enough data, anything could be predicted? Is that what you're saying there?
No, I don't believe that. Like, because once again, you're sort of always driving, looking in the rearview mirror, but it's because it's the only thing you can see. I don't believe the future is predictable, but I think that you can make the decisions that a wise man would make if you use the data. And so many people, they sort of approach a problem with a pre-decided upon opinion, like they're sure that it'll go this way. My old boss used to refer to it as results-driven research, where you've got the answer and then you torture the data till it agrees with you. While I think if you approach these problems and you just say, well, gosh, I've no idea, like I think it might work this way, let's see if it does. And that's really the best thing. And most of the research you do will find nothing useful. You'll throw away 90% of your research, and then 10% of it you'll focus in on. And if you pull one good signal out of that, you're doing really well.
Do you have varying degrees of confidence in your conclusions, or do you always have like a standardized way? You're like, okay, obviously there's room for error, but I'm 80% sure that this
passed all the tips.
Yeah, passed all my personal.
Well, with my trading research, there's just there's sort of a minimum quality that would make something usable or not usable. In terms of videos, my goal is never really to tell people what to do, and that's not sort of this is not investing advice disclaimer. It's actually that I like the idea, and I think my viewers like to think for themselves. And so I'll sort of say, well, here's a bunch of research. This is what it shows. And I'll often leave people to conclude an answer for themselves. And then you look in the comment section and, there's often quite different conclusions. People will, often it's sort of amazing, like the experts that will show up in the comment section and they'll tell you all sorts of new things and so on. And it's, I think, for me to sort of pound the table and tell people this is the way the world is and you should invest in this thing, even in the real world, like why would my sort of quick analysis to put a video together give you an answer as to how various securities will perform over various holding periods? And that's always the problem, even with listening to someone like, videos that sort of say my top 10 stock picks. The problem is they might tell you like today, these are my top 10 stock picks. But the problem is tomorrow they might read a news story that scratches one off the list and they wouldn't put a new video out, and even 2 years later, will they come out and say, well, now I'm done with my that video's just gone. And so if you're going to follow someone like that, the problem is that you're not getting the updates you would need to really work with them. So I don't have a goal. And actually all of the channels I like the most are the ones who, people like Richard at the Plain Bagel, he doesn't try to force his opinion on you. He'll sort of say, this is my perspective. I think it's useful. I might be right, I might be wrong, but this is sort of, what my research has led me to believe. And I think that's good and useful and honest.
So I talk about buying a global index fund inside of a tax efficient account because I think it's the most accessible type of investing that people can do simply.
Yeah.
But do you think from a professional perspective that there are better styles of investing if you are capable or have the time to do them?
Well, that's what it's usually down to, is how much of your time do you want to devote to it? Because I've spent 20 years, investing, trading, and I think I have good usable ideas. But the problem with that is that, especially when I was running a fund, I mean, I was, 12 to 15 hours a day in an office at a computer, analyzing and studying things and trying to find an edge. And should someone do that at home, or would they be better off, working a normal job and buying an index fund? Odds are they would do better, get a job, and even if you, even if this thing outperforms you slightly, and then there's all taxes and all sorts of problems. Like for most people, often the simplest investment strategy is the best. And it also has to be something they can stick to. And the problem with complex strategies is you always, even the best strategy will have its ups and downs. And often people really pile in at the highs and they cut all exposure at the lows. And so it's very rare. Actually, there's a great book by Jack Schwager called Market Sense and Nonsense. And he looks at not the returns of funds, but he looks at some of the best returning funds and the returns of the people who invested in them. And people usually underperform the funds they invest in. And the reason this is that they get huge confidence after there's been a positive run and they add money. And then if it has a down week or month or year, they take their money out, or they halve their position. They basically trade the trader, and they end up, often horribly underperforming a very high quality investment.
Saw that with Cathie Wood's ARK fund, even after the run, but everyone bought after the massive run.
Everyone bought after the run, and I think only now are people really getting out. Like I think that the AUM, or not the AUM, but the inflows, the AUM fell as the stocks fell in value, but the redemptions weren't that high last time I looked at it, which was surprising.
But is she in the business of fee collection? So she would have made a lot of money over that period just through the assets under management, surely?
Oh, she'll have made a fortune out of it. Yeah, I mean, Cathie's up, yeah.
Cathie's doing all right.
Before I became a finance creator, I was a sales guy. And there was nothing more annoying than when you thought you'd landed a big deal, only for it to fall through basically when the customer found something in your vendor process that your company was missing, like providing compliance, things like GDPR, ISO 27001 or SOC 2. Showing your company has top-notch security practices is now essential if you're selling to bigger companies globally, or if you're in SaaS, software as a service. This is where our partner Vanta comes in. Vanta automates compliance for ISO 27001 and many other major security acronyms which prove that your company is secure. They can save you loads of time and money and have over 7,000 clients, including big names like Cora and Flow Health. If you need better security compliance to land more deals, you can get $1,000 off by heading to vanta.com/makingmoney.
I mean, who was it? Sorry, I'm going to butcher them. Is it the Magellan Fund or the
Magellan, Peter Lynch's
But that
fund,
returns, say, like 20% a year on average or something. But the average person in that achieved like 6 because of what you said. You do
see that kind of thing. Like, I don't know with that fund specifically, but yeah, it just is a problem. And, obviously the thing with Cathie Wood's fund is it's really volatile. So that probably gets even more magnified. Like that's even that's kind of why people lean towards sort of lower volatility investments, is they get scared out a little bit less, because if something is really volatile, it is an emotional nightmare to invest in, and thus, people panic. But yeah, I don't know. I think it's hard for people to make an investment plan and to stick to it, because we're filled with all of these biases, and everyone is, like even professional investors, whatever it might be, all have the same biases and make the same mistakes that everyone else does.
Even you?
Oh yeah, I mean, I look back and there's loads of things I could have done.
What's the worst thing?
Yeah.
What's the worst thing you've done?
Oh, not even like horrible things, but even, a good example would be I worked on a trading desk during the credit crunch, and you had a front row seat to watch the financial world ending, and if you ask the guys on the trading desk, like, do you want to buy, do you want to go long the S&Ps and sit on it for the next 15 years? Not many would have said yes. But equally, it's sort of a funny thing, because when you're in a role like that, you're sort of already long the market anyhow, because your career is going to do better if the stock market rises than if it falls. And so you'll often find a lot of financial professionals don't own they don't have as much stock market exposure as it might be wise to have, simply because they work in the markets and they think, well, the day the stock market sells off horribly is also when there'll be job cuts at work, and it's when my house will fall.
So
in
it's
value.
compounded problems all coming at the same time. That makes sense.
Yeah. So yeah, interesting. Like you say, they're long on the market by being in that career, because if the market performs well, unless they're a short seller or they're betting against the market, say. Yeah. There's one thing like about your work, you clearly into finance history. I know you made videos on like Ponzi and these kind of schemes. And if there's so many echoes between those videos and then modern like FTX and things like this.
Yeah.
You've said to me there that you look at the past because it's all we've got, you can't learn from it. But why do you think normal people don't learn from the past to the point where common scams can just be rinse repeated every 10 years?
I think that a good con artist is a good con artist. They know how to they know how to trigger emotions in people. I think people also want to fall for stuff like in fact, it was interesting, the video I made on Ponzi, one of the things I thought was interesting was just the context of the time, because you might say, well, why would people fall for there were all sorts of scams in the 1920s, and it was a period in which amazing things had happened, right? Like the Wright brothers had sort of, a couple of bicycle mechanics had made a thing fly, and now there were planes that would travel all over the world. There was electricity was suddenly available. All of this stuff was happening. And then, if someone turns up and tells you they have a magical way of making money, you kind of go, well, gosh, there's a lot of magic happening in the world right now. And so I think, people were not necessarily suckers, but they were in a world that was changing so rapidly that maybe you're more willing to believe the unbelievable than at other points of time in history.
Do you think that AI is a similar kind of transformative narrative that might lead people to be suckered into things?
Well, there's a lot of AI nonsense right now. Like whether you believe that firstly, everyone, when they think of AI, just think of chatbots or things that'll make an image, which is really just the most noticeable thing. Like within, we'll say, pharmaceutical industry, or even within finance, we've been using versions of, we've been building towards AI for many years, because that's what quant trading is. It's trying to build a machine that can trade investments well. But, I think there are echoes of the dot-com bubble. Like in 99, a huge number of companies, like they'd be, a brick manufacturer or something like that, and they'd rename themselves, bricks.com or something, and get a boost in stock performance. And I feel that, there's data I saw a while ago of the number of companies that had mentioned their AI strategy on an earnings call. And it's like, do they have AI strategies, or is the salesman just using ChatGPT to write his pitches?
Even Apple have conceded, haven't they? But they call it Apple intelligence. They've rebranded it for themselves. They're smart, aren't they?
But similarly, isn't like, I think the Microsoft one, what's it called? Copilot is just GPT-4. So,
But a lot of companies, like, because I think, like you said, why do people fall for the same scams? Whenever there's new technology like carbon credits or AI or crypto, that's when people take advantage of people's lack of knowledge on the new thing.
Yeah,
So,
and people want to seem modern as well. You know, like if someone came to you and pitched an investment scheme that was based on like a coal mine or something like that, you'd kind of go, oh, I don't know. While if it's tied to AI or, you know, electric airplanes or something like that, you kind of go, oh, well, that sounds high tech. I want to be, you know, I want to tell the guys down at the pub I invested in that thing.
And it's contagious because in venture capital, companies that don't even have an AI aspect, they see other companies getting funding for AI. So they might be like a juice company and they're like, oh, and we have an AI aspect that helps you tell what flavor juice you have. And it's completely irrelevant and not necessary, but they added it so they can get funding easier just to have an AI aspect, but it's got nothing to do with their business. So people kind of incorporate these new technologies to try and look modern and ahead of the curve.
And I think it's funny because actually the other day I was entertained. I was listening to the Odd Lots podcast, and they had a woman on who was it was all about how Ozempic would affect food companies, you know, because if people are no longer
eating,
or sort of binge eating on, Fritos or whatever.
I saw 5% of like fast food company profits are at risk or something.
That was kind of what they were talking about. But they had this woman on, and she was very interesting in many ways. But the company she worked for, I think, had some sort of AI thing for working out like new flavor ideas. And she said, well, you know, it's interesting because many of the flavor combinations that work well in AI didn't really work in real life. And she said, I think people just like the more traditional pairings. And it's like, it might be that people like traditional pairings, or it might be that we've had thousands of years to sort of taste
we've refined it down.
Milk goes well with coconut. So, you know what I mean? Like we've mixed everything together.
Tuna and watermelon isn't going to float. Right?
And no matter what the AI says, you know, and so it's funny because, you know, I do think there are problems that might require an awful lot of iteration. And therefore, a machine will do that faster than a person will. But there are certain, you know, flavors. I don't know. I mean, I'm sure they have some science that I know nothing about, and I'd be an idiot, you know, being negative about it. But it only surprises me so much to hear that an AI bot isn't as good as, you know, someone who eats at saying what tastes good.
Yeah, they've got no ability to taste the thing that they're recommending. So, AI is one. I think there's a quote, isn't there, that we underestimate what tech can do in a year, or overestimate what it can do in a year, underestimate what it can do in 10.
Yeah. Well, that's an interesting thing. It's funny. I was listening to Hidden Forces, another podcast, on the way here, and the guy, Dimitri, was talking about how the world had changed from the 1990s. And it was interesting because his idea was maybe more that like the way people behave and like the vibe has sort of changed. But in terms of overall technology, like, you know, I look at, if you get in a car from 1995 or a car from today, like, you know, the big difference is that the new one has sort of a computer screen in it, while the old one had analog readouts. But you wouldn't be awfully confused, and there's not sort of massive improvements.
I think the biggest is go to a gig and see what the crowd looks like, and everyone's holding up a phone. And I think that speaks to the biggest change we've seen in our lifetimes.
Well, just that we have these everything machines, you know, and it is amazing. And I think, but it's interesting in terms of like, the mobile phone is definitely a huge change over the last 20, 25 years. But beyond that, you know, there's often this idea that we'll have a Jetsons-like future, and then it's sort of the same as it was, but instead of a camera, we have a phone. Instead of a book, we have a phone. Instead of you know?
And everything machine is perfect. Dictaphone, all these. You needed 50 devices, compass, and now it's all compass. For every time you need to know where north is.
Torchlight, everything's all in the phone.
Yeah. What about crypto then?
What about her?
Well, how much have you got?
That'll be a big zero. I find it very interesting because what's interesting about crypto is there's a bunch of people trying to sort of reimagine the financial system to say, if it hadn't been built the way it has been built, you know, which is often off of a history of, you know, paper certificates and things like that. Could we build it better? And I think that's really interesting, and just in terms of how money is moved, how it's settled, all that sort of thing is interesting. But in terms of like, would I put my savings into it? No, I think it's it's not really of any interest to me on that front.
Do you think there's something then that retail investors, normal people that are listening to this could learn from your quantitative or quant research? Is there anything that they could apply?
Not necessarily, because a lot of my stuff is just about predicting short-term moves in markets. And in truth, with that kind of research, you don't necessarily need to believe or care that much about Actually, there's a very good book I read about a year ago about Jim Simons. I forget what it's called. I made a video about it, actually. Great book, but one of the very funny examples was of an investor who came into Renaissance Technologies, and they were asked for an explanation. And one of the traders, I think it was Mercer, came out and said, "Well, let's say if Chrysler stock was doing this, that, and the other," and he kind of made this big example around Chrysler, a stock that hadn't existed in like 5 years, and it sort of shows that like, a quant investor isn't really that interested in the name of the company or what it does. It's more interested in sort of its statistical properties. So,
and are you doing this analysis on individual companies, or are you talking about whole markets? Or
usually, for me, like different people do it differently. I was very index based. I care a lot about liquidity. So basically, the thing that makes and I care about taxes. So futures are kind of a good product for short-term trading, just for US tax reasons, and also just for liquidity. It's very at the size I've traded, it's very hard to move the futures markets.
And is a lot of it behavioural then? Are you looking
so
for those
usually the way it will work, there's a mix where I've sort of tried just to throw a computer at the market and see what it pulls out, and then originally, I tried to just think about what people would do and whether, basically a behavioral idea, and see if it works in markets. I found the former idea to be a little bit better. Essentially, if you look for market moves that might cause people to make mistakes, there might be an opportunity in there for you. Because I think most of the time investors in markets are very rational, and once in a while something really strange happens, and that's when they sort of fall back on instinct, and often in that instinct period, sort of herd behavior occurs. And if you're looking to find repeatable trading ideas in market, you're basically looking for herd behavior. So.
Okay. It's interesting because you say that the market's rational, but you watch a YouTube channel and it often focuses on the irrational aspects of the human condition, doesn't it?
Yeah, well, that's sort of what's interesting, isn't it? Like, I think what I often look for, and what I'm drawn to both in terms of just like what draws my attention, is unusual things that maybe need a little bit of explanation. Like one of the videos that, kind of the first big video I had on my channel, it felt big at the time, I think it got 20,000 views, was when oil prices went negative, and people said, "Well, what's going on?" And I said, "Oh, I can explain that," And so, I guess I'm drawn to sort of unusual examples or odd things that happen, and sort of how they fit within finance theories.
I worked for a property company before. I was like a few jobs ago before this, and we had a series of clients that were traders, and they worked in oil futures, and they were the guys that made 700 million in 10 minutes, and then they've all disappeared because the Americans, I think, said that they wanted to do them for, I don't know, they bet that the oil prices would go negative, and they made a lot of money in a day.
It's an interesting thing because what really just happened was that the way futures work is oil has to be delivered for West Texas Intermediate has to be delivered to a facility in Cushing, Oklahoma, and an awful lot of oil had to be delivered in a couple of days' time, and they realized that there was no room for it. The tanks were all full because COVID had happened and planes weren't flying, cars weren't being driven, and so there was really the oil, of course, is intrinsically valuable, but the cost of storing it was greater than its value, and that's why the price went
negative. So it was a storage
negative.
problem, not
It was
an
a
oil
storage problem,
Yeah.
and even just the idea of pipelining it to somewhere else. These pipelines get and they get booked, months and years in advance, so you can't quickly come up with, if you're receiving a couple of super tankers of oil, you can't quickly, find a place to put it. So
you mentioned a second ago that Ex-Hedge fund, or you did have a hedge fund.
Yeah.
Would you describe your hedge fund as successful?
Yeah. I mean, we were in business. When did we launch? Around 2012. And I sold the business in, I think, around 2018. And then I kind of stayed on as a director a little bit longer. But yeah.
Did you enjoy it? Were you happy when you sold it, or did you miss it, like staying as a director?
It was a very funny feeling. Initially, my plan was actually just to relaunch. As part of moving from, I lived in the UK and was moving to the US, and I thought, you can't manage a UK fund from the US, so. The plan was to sort of relaunch in the United States, and then, there's sort of non-competes and things like that. And basically, when it came time to relaunch, I didn't really want to anymore. Well, no, it was even just, small children, you're going to get on the road, you're going to pitch to investors, you're going to, running a hedge fund is quite different to being a trader. And I really like research. I really like trading. When you're running a hedge fund, you're kind of managing people, you're meeting with investors, you're doing almost everything but the thing that you are most interested in.
He said you've got like 200 people that have funded it. Each one wants one day of your time a year, and they've all given you 200 million quid. So you got to give them that day. So that means I just spend the whole year flying to meetings, and I don't ever actually do the.
No, because you hire a marketing person, but no one wants to speak to the marketing person, right? So the marketing guy just sets up meetings for you. And I don't know. It's, it was an amazing experience, and it was really intense. Like, we worked so hard. But then when, you take a year off, I almost wonder if this would apply to many people, that if you take a year off, you kind of look around and say, what do I want to do? And it might be something different than what
COVID
you're
did
doing.
That, right? That made most people stop. And then loads of people were
and even consider where they wanted
I
to
don't want
live
to do this anymore.
And all sorts of things.
How you want to live, where you want to live, what you want to do for a job.
You just kind of had this room to breathe. You get off the treadmill for a second and you think, oh, why the fuck am I running on that thing?
Because often there really is just that, inertia in life, where... it's probably worthwhile every once in a while to pause and ask yourself, is this... Because actually, if you had asked me in like mid 2018 or 2017, I would have told you I'll do this till the day I die. I really... I loved trading. I loved research. I still love all of that stuff, but I didn't necessarily find I was doing it. And in many ways, building a business is very exciting and it's a different thing. But in a way, you're kind of building with this idea that you'll get back to the thing you used to do. You never do, yeah.
Do you take this approach throughout your whole life, like research everything you do, or is it just financial?
I don't know.
If you're picking schools or,
It's funny. I think I'm an analytical person, I think, most of us sort of are the way we are. And I think if you can line up a type of work that works well with your nature, you'll probably do well at it.
I'm going to tell you about today's video sponsor, Manual, from the privacy of my own studio, because T loves rinsing me about my hair, but actually he's having a harder time of it recently. When we first started filming the podcast, my hair was noticeably thinning. The difference from then to today has been a result of me using Manual consistently now for about 12 months or so. It's really easy. You just go onto the website, fill out the questionnaire, and they will send you clinically proven treatments for preventing hair loss straight to your front door. No need for an appointment or to even leave the house. Receding hairlines are something that millions of men are affected by, and there's no shame in going bald, if that's your thing. But I got a head shaped like a Cadbury's cream egg, so I'm fighting for every follicle. If you want to join the fight, then you can sign up using the link below, and if you use the code MM55, that's MM55 at the checkout, you'll get 55% off your first order.
So, you obviously do a lot of research on your channel now as well. So it's kind of similar. And you said to Richard coughing at Plain Bagel that 90% of what you did when you were in the quant side was research.
Yeah.
Yeah. This thing about doing something that you're good at, I would say that maybe one of my talents is I'm a good communicator. I'm good at, people will say, oh, I'm relatable. And in the finance world, that we struggle with that. But then the research side is something that I've kind of had to push myself into, if that makes sense, to make the content good, because I have a desire for it to be good. It's not something that's naturally come to me.
Yeah. But even still, I guess, if you are researching it, because sometimes I'll start work on a video and I'll be, digging into it, not just, this is boring, if I don't find it, it might be an amazing topic, but if I don't find it interesting, I'm not going to communicate any enthusiasm for it, because sometimes you just sort of feel like, gosh, I do a video a week. It's time to work on a video. Yeah. But, there are times when there's nothing that really grabs your attention, and that's going to be hard, but luckily there's so much happening in the world.
So what do you do in times like that? Do you just not make the video?
Make a video about Elon.
Something else?
Well, it's
Dash Elon.
Well, I have, I keep a list in my phone of, like, often I'll just be out and about and I think, oh, that's a bit interesting, and I'll just put a note down. And so if I don't have, if there's nothing like really gripping in the news or whatever, I'll dig through. And often I look through that list and it's ghastly. You think it's a great idea at the time and you're like, I think I know why I didn't make that video. Yeah. But other times because often what I look for is not so much just to tell people the news, because they often know the news. I think it's to say, here's a thing that's happening, which is, timely this week, but more interesting, here's like an idea from finance that if you know this, this can sit in the back of your head and it'll be useful to you for years to come. So sort of, I guess, a meal for a lifetime tied in a meal for a day.
I think as well what you do well is, if I use an example of, say, Silicon Valley Bank and the collapse there, there's a lot of hot takes and people saying this happens. And then you go, no, actually, this is what's happening. This is how it could affect the system. This is why it's important or why it's not important. You have that finance view on it that many creators will just rush to repeat the headlines. And you can tell they've just skimmed the FT and are spitting out what they've read there.
It's funny, though, because there are some creators, like, I'll sort of expect them to have the funny thing with YouTube is that you're slightly incentivized to put up fairly clickbaity thumbnails. And there's some people, and I'll see their thumbnail and I'll be like, oh, what an idiot. But then if you click on the video, you're like, oh, I actually did a pretty good job at that.
I think you also, though, you create the audience long term. So for you, I think, you could probably put out anything and you're going to get a couple 100,000 views because people trust you, your research, your style. I'm the same. I can... Instead of going like, why the S&P 500 is going to crash, I could say, should you buy a global index or the S&P 500? And that video will get a load of views because the audience know, they trust. I think people who rely on clickbait go down a path that they can never get out of.
Yeah, well, and often the problem with relying on clickbait is that often the thing that will sort of drive people's emotions the most is very negative. So it's sort of, like you say, I mean, if you look at some of the big finance YouTubers, like a lot of their thumbnails are sort of, the world is ending, but every day for the last, 10 years, they've been saying that. And I think it does work in that people sort of see the flames in the thumbnail and they kind of go, oh, I need to know this. But after a while, like if you've watched a few of those videos, maybe you lose interest in sort of the same thing over and over.
Get desensitized. You're like, okay, like the last 4 videos you said it's the end of the world and the world's still going, and now you're making a new video. So it's...
I also think... The long-term finance audience wants to learn. They don't want to see the world burn. You might get like the passive viewer who goes, bloody hell, clicks on that. But what you want, like you said, maybe off camera because T was too busy messing about, is you want an intelligent audience that wants an intelligent conversation, and they're going to show up every week for years, right?
Well, actually, sometimes, like, I'll run into someone, an awfully smart person that I have a huge amount of respect for, and they'll say, oh, I love watching your videos. And I'm like, gosh, because I don't, you know what it's like. You put out these videos and you see a number of views, but you don't really know who these people are or kind of what it means.
How do you feel about the success of your channel?
It's funny because as I was saying to you earlier, I'm often surprised, like when someone will say to me, like, oh, you have a big channel. And I guess I know a few people who have bigger channels than me. And so I still think of myself as kind of a small YouTuber. Yeah. And so, I have friends like, CoffeeZilla, who is, he puts out a video, it gets 3 million views, the biggest video I've ever had. In fact, actually, an interview that I did with CoffeeZilla a few years ago probably got more views than almost any video on my channel. You know what I mean? So when someone says to me, oh, you have a big channel, I'm like, well, have you seen this one? So.
That's one of our guests, Tim Armu, said that. He said that you always, whenever you're in a new room, you're like, oh, I'm a millionaire, but he's got 10 million. And then the guy with 10 million is like, oh, he's got 1 billion. And then the guy with 1 billion is like, well, he's got 20 billion. So like, you're always looking at the next stage up. But do you ever do like quantitative analysis on your channel?
Not really, because
like yourself.
It's very funny because I never know. Every video I make, I'm an optimist, and I always think it'll do really well. And then there's some that do awfully well.
You're the opposite to me. That's a lovely attitude.
No, but I guess I'm enthusiastic. When you hit the upload button, you're like, well, I think that's decent. And then, but
that's terrifying for me, that process.
He hits the upload button, turns off all the lights, and puts a blanket on his head. He's just like, everyone hates me. The world hates me.
Behind a pillow for a little, and then I come out, and everyone's like, oh, it's okay.
but the thing is, I can never gauge. Like when a video does awfully well, I'm like, I really don't know how, and there's some of the videos I put up that I really like that didn't get many views at all, and I can never I have no instinct for what people will want to see, so I just put up what I find interesting.
I think you have to separate yourself from views being the measure of success, because they're not. Like, it can be so random. Timing as well. How do you know that you might release a video and then that hits the news somewhere else? I think most YouTubers, once they get past a certain point, realize that views are a bad metric of success in a way.
Yeah. I mean, you always want, you wouldn't go to the effort of making a video if you thought that no one would watch it. That would be insane. But
you did that at the start though, right?
Kind of, actually. It is true. Yeah. Like it's, early on, a lot of my videos were sort of to help out my students because, I teach at 2 universities here, and often as exam time approaches, I'll get these emails and they'll say, can you explain implied volatility to me again? And I start typing, and then you start sort of, if you get 3 of those, you copy and paste and send the same text to 3 different people. But I thought, well, gosh, I could just explain it once quickly and here's a link, and that would work better. And so actually, amusingly, when I got to the end of probably my first year or so it took me, I bet, 1.5 years, maybe 2 years to even get 1,000 subscribers on YouTube. And at that point, I thought, well, I've done what I came here for. I've got the links that I can give to the students. I'm done,
What do your students think of I mean, it must be quite odd for them, right?
I don't think, amusingly, I would bet that most of them haven't really heard of the YouTube channel, because an awful lot of international students, so they, they're from China, they're from India, like the Chinese students, they don't have YouTube. Actually, a funny thing though is about 1 year ago, one of my students told me that there's whatever the Chinese version of YouTube, someone has like overdubbed all of my videos and uploaded them there. So that's kind of funny.
You're just all over WeChat or something like this. Yeah. I mean, it seems mad to me that they wouldn't know. What do you think of the space as a whole? Before you answer that question, I remember when you started to blow up, and it felt a bit like the chatter in the personal finance community was almost like when the ETF for Bitcoin came out. It was like, here's an example of mainstream adoption of what we do, in the sense of you're from a traditional finance space, you ran a hedge fund, and then you started a YouTube channel. It felt like the traditional finance world was taking us that space seriously.
Well, it's interesting as well because I guess there are, like Ray Dalio has a YouTube channel, but it's very produced.
Highly stylized.
Yeah, and it's it's more like TV and it's sort of like corporate. While I think the thing that people like about YouTube is that there's a real person there talking to them. And, I think, there are, of course, like, really big kind of important people on YouTube, but often I think it's almost a mistake sometimes if you make it too much like television, because television is designed to be sort of watched and it's about separation in a way. It's sort of there's on the stage and off the stage, while YouTube always feels more like a friend telling you things, or even, listening into this conversation. Like I imagine people at home, they're listening and it's almost like they're kind of down at the pub with friends talking about something, and they don't get to talk very much, but there's a much more natural feeling to this than we'll say a traditional television.
We get traditional people in here from traditional media, and they come in and go, "Oh, it's an actual house," and I'm like, "Well, of course it is." To me, it's like, why wouldn't it be? But they think maybe it's a set that's made to look like a house or something like this. But yeah, it seems obvious to me to be low budget almost, because I'm a consumer of YouTube, and the best thing I like when I see a creator is going back to their old videos and seeing that journey.
Yeah. Well, it's so interesting how it's funny though, because there's a few things that possibly make you good at YouTube that a lot of people can't pull together, because you might be really good at telling a story, but not good at, working a camera or working the microphones, doing all of this stuff. And I think it's hard. Like I just happened to be a bit of a hobbyist photographer and had a decent camera around the house when I got going and things like that. But even, the microphone, like in the early days, my sound would be awful, either way too quiet or loud and clipping and all sorts of problems. And the thing that used to make me laugh is that people would say, like, get yourself a decent microphone. It's like, I've got 12 decent microphones. I just don't know how to use them.
Yeah. What do your peers think from traditional finance about what you do now? Do you speak to anyone?
It's funny because I think most of my friends wouldn't even really know that the channel exists, because I don't really think about it or sort of talk about it that much. Like, because, my main focus, I teach at the university. I do even like a lot of online classes for the university. So that's what's quite cool, is I've got like a good sort of streaming setup, because of my YouTube studio to do teaching. But most of my friends, I bet most of my friends don't even know that I do this.
But the channel's a big thing, right? You say your focus is the university thing, but the channel is... the channel's a big business.
But I think it's a niche thing once again. Like, I think, there's people, like I said, there's people who know it, and they sort of, if they've watched a lot of the videos, they know it and they think it's great. But if you haven't, it's entirely off the radar. Right?
Every video you do fills out 10:02 arenas. So, it's niche, but it's, that Drake only filled it 3 times. So, I think it's... the scale is massive, right? And it's international.
Yeah. Well, actually, a funny one was a little while ago. I put up a video it's the best performing video I've done on the line, the linear city in Saudi Arabia. And that really quickly hit like 2 million views or something like that. And that week I went to my guitar lesson, and the teacher was like, I saw you. And I was like, what do you mean? And he's like, you have a YouTube channel. so that kind of, I guess, went outside the finance niche into just kind of broader YouTube.
Did you ever get scared?
How do you mean?
Like, just scared of like the possibilities and the growth and like being in the deep end, and you're like, wow, now everyone knows who I am. And
well, only now that you're saying it.
yeah.
It's like, I feel like the bigger YouTubers get, like the more chill,
I didn't sell a hedge fund, mate. I didn't sell a hedge fund, so I'm still trying to pay the bills. maybe purchase a bit more comfortable, so it's a bit more chill.
Actually, it's funny because over the weekend I was talking to a guy who has a big podcast, and it's funny because my wife had been on a plane. And she noticed that, you look around on the airplane at what entertainment people have, and a number of people had his podcast on. And I was like, your podcast is way bigger than I thought it was. And he's like, yeah.
Yeah.
Now, while we've got you, what I would like to talk to you about is if we could zoom out a bit, maybe leaning on your research, is a little bit about the UK economy and your views. You say you dip in and out of the UK.
Yeah.
You made a video where you looked at, I think it was a Goldman Sachs paper, which basically pointed out that the UK, amongst its peers, was doing pretty badly.
There's a number of struggles. It's very, it's always complex as to what causes problems, and people for various reasons. Like it's very easy to say it's definitely because of Brexit, but it would appear to be something other than that. There were a number of papers I looked at. One, I'm trying to remember who wrote this one, but British stocks have maybe underperformed. The underperformance began around the time of the Brexit referendum, but it's so uniform. Like a way of thinking about it is that if Brexit was definitely the issue, there would be some companies that were heavily impacted by Brexit and they should do horribly. And there's other kind of British companies, but they're so international that they're mostly unaffected and they should do fine. While actually you find that the discount is fairly broad-based, like that all of the companies have sort of started trading at a discount to both US and European companies for some reason. And some of it is, there's kind of been maybe a little bit of a productivity deficit in the UK over the last maybe 20 years. And this has been talked about for quite some time. British businesses are not investing as much. Maybe they underperform, and maybe the uncertainty associated with Brexit. Like, in fact, that's partially even why I wanted to move from a UK-based fund to US, was just that, it wasn't very obvious that I'd be able to sell internationally post-Brexit. So, you look at these things and you think, well, maybe the reason, although Brexit itself is not necessarily the cause, maybe it sort of put a bit of a scare amongst business people and they backed off on making any big plans, and the lack of plans has possibly hindered the UK economy. But nonetheless, it would still appear that, that British stocks are trading at a discount to, even when you adjust for sectors and so on, to American stocks.
You talk about tools. I'm going to point to, I say it all the time, but the internet speeds here. So I've got shockingly bad internet where I live up north. I'm talking copper wire. Like, it's below what they deem as like a minimum requirement in terms of speeds. Do you think lack of investment in infrastructure like that could be the thing?
that is exactly the type of thing that will hold people back, because productivity is just basically how much work can you get done in a given time, and what are the tools. You give a person a computer, they could do more work than they can do without one. And I think that sort of thing, and a whole bunch of little things like that could be what has been holding the UK back a little.
I drive to my local Tesco's car park to get the signal to upload videos for the channel.
Do you really?
Yeah,
wow.
that's how slow it is. Sit there for an hour with a meal deal and upload
it's funny because I have quite fast internet, and a while ago I worked out that when I plug I used to just wander around the house with a laptop, and I worked when I plug it into a router, I get about 10 times the speed that I get on Wi-Fi. And then I realized if you have all of the correct cables in your house, you get even faster internet. So then rewired every cable in the house.
So I bought Starlink, which is Elon, your favorite guy.
Yeah.
And what he didn't really mention was the upload speeds are terrible, which is, I think, a function of a signal being sent down from a satellite.
Starlink is kind of an interesting thing because it's basically a router in a Wi-Fi router in low Earth orbit, right? And what's interesting about that is that when not many people use it, you'll get decent upload and download speeds, but the more people who sign up, the slower it'll get over time. And it's a very funny thing, because when you think like 2/3 of the planet is covered in water, most of the satellites are hovering over areas where they're doing next to nothing. And then even in terms of who can afford to pay for an expensive internet service, it's kind of Western Europe and the United States. So it's a very interesting thing where an awful lot of the satellites are it would be amazing if you're like a farmer out in the middle of nowhere. Yeah. But, and I think at the moment in big cities, you're probably still doing okay with Starlink. But should mass adoption occur, you'll probably see slower
It's certainly not
speeds.
cheap either. It was sold as it would be very cheap. It's not. It's £110 a month I pay, I think, for it, just to have an okay download speed, which is nowhere near as fast as fibre. And then, like you say, the people I know who've got it are like, they've gone travelling in their £100,000 van around Europe and they stick one on the roof. They're like rich people. Yeah. It's not like helping people in Namibia get online or whatever.
No. Well, that's kind of the problem, is that it doesn't, it's who knows what will happen in the future, but it seems it would struggle to serve a mass audience, I think.
So the future point there that you mentioned, what do you think will happen in the future? The next 10 years, like what kind of trends or themes do you think will dominate investing?
One thing I think is possibly that we'll see a reversal from growth to value, and that's just based on the fact that in the very long run, both styles of investing seem to perform about the same.
You mentioned growth and value investing. What do you mean? What's the difference between the two?
Well, it's kind of two historically quite different approaches to investing. So growth investing is finding companies that are really ramping up, like their sales, the size of the business is really growing fast. And people invest in that to sort of own the new thing. You can think of like when computers first came out, or like Apple when the iPhone came out, massive growth. And so people jump on growth with the idea that momentum will continue, and maybe that company might end up owning the whole category, the way a high percentage of phones, we'll say, are still made by Apple today. Value investing is, it doesn't need to be the opposite, but it tends to be, where it's based on the idea that you just look at the expected cash flows from a business. So you're trying to find good value, or basically cheap stocks. And so that will involve analyzing the accounts and just saying, well, we've got a whole bunch of stocks here. These ones you get, the next 10 years worth of earnings you get for this price, while you're paying a much higher price for earnings of other companies. I'll take the cheap ones. And so that's value versus growth.
Awesome, thanks.
Do you prefer either style?
Historically, I've been a growth investor. I think that growth has outperformed for so long at this point that it seems unlikely to me that it just kind of can't do it forever. Also, it's worth noting that even when growth does work for a long time, it's often different companies, because companies go through these phases of huge growth and then they become mature companies, and you might then be swapping them out for new high growth companies. But I just feel that really over the last kind of 15, 20 years, there's been almost no performance in value investing. And it seems to me that if you're a little bit nervous that markets seem toppy or expensive, rather than going to cash, I'd say, maybe take on, some of these value stocks that haven't performed. And thus, if a bubble bursts, they shouldn't necessarily burst because they were never inflated to begin with. But really, since the credit crunch, all of the growth has kind of come from what they, now we call the Magnificent Seven. There used to be the FANG stocks. But if you look at, European or British stocks, they really haven't done much since the credit crunch. Most American stocks have not done much since the credit crunch. And it's been this sort of handful of tech stocks. And I would think that going forward, it's probably likely that we see a resurgence in maybe some of the overlooked sectors.
Do you think rates are a big factor in that? Interest rates, as in
it's a huge, because one of the reasons, also these tech firms have because rates were low, they had a ton of money thrown at them and they were able to do stuff with that. So that's a positive. But then on the other hand, when you have a company where all of its earnings are kind of 10 or 20 years out in the future, when $1 in 20 years' time is worth $1 today, which is what you get in a zero interest rate environment, well, that's a very valuable company. When you start discounting things at, 5% a year, even right now, there's very much that feeling that people are still saying, like, when will rates go down to normal? And look at a 100-year chart of interest rates. Like, we're not high at the moment, and so should rates stay higher for longer, a lot of these sort of less, I don't know, there's some of the Silicon Valley companies that, like, these Uber type, I made a video called Blitzscaling that looks at companies that essentially aim to grow and not really worry about
making money.
And when you look at that kind of a business, like, it's a very unusual environment we've been in when that has sort of been the stuff to invest in over the last 20 years. And it slightly entertains me when, you'll see these sort of Silicon Valley thought leaders and they'll say, I'll give you business advice as to how to, become very wealthy and blah, blah, blah. And they're advising you to start up a business that requires huge amounts of capital, that generates no return on investment. You know what I mean? Like it just, the stock price goes up. But for most people, like, if you want to start a business with your own money, you probably want some sort of return. You want it to pay you.
Yeah, you want cash flow. You want positive cash flows that you can reinvest and pay yourself with, or you get the guy from SoftBank to think you're
like WeWork's a great example. But even it's been pointed out, the big story at the moment is whether Tesla shareholders will vote for Elon's pay package or not. But Elon's pay package is more than Tesla has ever made in earnings. I know it relates to stock price, not to the earnings, but there's many Silicon Valley businesses like that where, in terms of the cash flow they've generated, it's negligible. It's all of the wealth just came from stock price. And that works. Well, it can happen in this sort of zero interest rate or really declining interest rate environment. But there is a point at which, if you owned 100% of a business, you'd have no interest in the fact that you have to keep putting money in and nothing ever comes out. While if it's publicly listed, or if VC investors will keep giving you more money for it and sort of keep marking it up, well then you're a billionaire, and you've got a food delivery app, and there's 20 other food delivery apps that are all the same.
So where do you see that going? Like, in the, for example, Tesla, for example, like where would you see?
Well, Tesla is a profitable company, and the thing is, the people who buy the cars really like the cars. I don't think it's, I do think it's an expensive stock, but it's not. It's not in this group. But there's many of these. It's funny because many of the kind of hot VC stocks at the moment are versions of things that we saw back in the late 90s, that kind of, dot-com bubble. And someone said, there was a great one, what was it called? Cosmo.com. And it was kind of Deliveroo, but in the late 90s, and they would get anything from a store until you could kind of order a CD from them, and they'd go to a store, buy a CD, bring it to your house, And obviously that's not a good business to be in. Like, if you're paid sort of 50 cents and the guy on a bicycle is like going all around.
You need slave labor.
Yeah. Well, you need people to just keep bidding up the stock, and you can pay the guy on a bike with stock rather than with cash because there's no cash coming in. And those things really flared out quickly. Like, I think one of the biggest sort of boom and bust stories, there was a British one called Boo.com, and I think they raised like £1 billion or something like that. And I think they wiped it out in a couple of weeks. Like, it's a crazy story. I'd have to look it up, but it was kind of one of the crazier ones. But today, many of these companies are 5-6 years old, and they're still not cash flow positive. And, should they increase prices in order to be cash flow positive, they're competing with someone else who'll keep price is low. So I don't know how that ends.
Well, Twitter never made any money, did it? Or?
No, it occasionally was profitable, but I think the best year it ever had made about $1 billion, and so it's not, I mean, it's a great example of a company that sort of was culturally important, but as a business, if it was wholly owned, you would never want it. Like, more money has gone into Twitter than has ever come out in terms of cash flow.
But for the VCs, does the model work because they get to dump it on the market? It's like almost like a great.
The funny thing is, they used to dump it on the market, and they don't really anymore. Like in the late 90s, like during the dot-com bubble, basically two guys and a computer would sort of slap a name on the door, and they'd say, we're going to sell dog food on the internet. And there'd be an investment banker knocking on the door, and they'd say, shall we go public next week? And it's like, can I get a second computer? And, there'd be a huge valuation. Then it'd be gone 6 months later. While now companies are staying private for much longer. And it's sort of interesting because will the VC investors be left holding the bag? Because we'll say if retail investors do seem to get excited about certain types of stock. In recent years, like some of those space things like Virgin Galactic got people very excited, and
a lot of the SPAC stuff.
Yeah, a lot, like kind of stuff that sort of seems futuristic and kind of hypey. But you have to wonder how, like, sort of the fifth line, food delivery app is going to do, or the version of Uber with a different logo. You know what I mean? Like, you have to wonder, will. There's sort of this thing where they need to find a bag holder. And the truth is, the current environment, like, we still do have, we've got sort of Bitcoin at 70 grand. We've got, GameStop pumping last week. I haven't looked at how it's done today. But, retail is still willing to sort of buy stuff that seems exciting to them. But there's many times it took Google a long time to go public because people have been so burnt by the dot-com stocks that you said, like, it's a search engine. They go, no, I bought Yahoo, thank you, AOL, no thank you. And so, but in the long run, there's no way around it that a business that doesn't make money isn't a very good business. And, maybe some of these things can pivot into something profitable, but not all of them, I don't think.
In the reverse then, if a few businesses drive most of the market returns as outliers, but VC are holding these businesses pre-IPO for longer, does that mean we'll just see less value available for investors like myself, say, who buy indexes? Because by the time the business gets to the index, it's been through its growth stage.
So the old idea of an IPO was to raise capital to grow a business, while now it's an exit for sort of founders and VCs. So it's quite a different thing. Like, it's a later stage firm that there's an argument that it's towards the end of its growth phase. And actually, that's even an interesting thing. There's Aswath Damodaran did a bit a while ago where he talked about how long companies grow for. And you'll see people building models for many, sort of businesses that are hyped right now. And they'll say, well, it's going to keep growing sales at the same rate over the next 10 years as it did over the last 10 years. And Damodaran points out that it's very unusual for a company to be in like hyper growth for maybe more than 5 or 6 years. A company just matures at a certain point. And I guess if the VCs are wise enough to get out as the growth is starting to dry up, well then, maybe the retail investor becomes the bag holder. But many of these are still private, so.
It certainly feels like retail are bag holders. IPOs are a disaster whenever I look at them.
Yeah. Well, I guess it's a very different market to a decade ago. And so, it's sort of hard to work out what's going on, like, in terms of, but I still think, for an investor, like, I very much lean towards, when people ask me, what should I do? I kind of think buy an index fund, but I do think, there's once in a while, there's a few companies, and I won't say which ones, but like I look at, some of the big stocks within the S&P, and you kind of think, well, I'm not sure that I want to own that one. And even actually there was kind of the funny thing a couple of years ago when GameStop and what's the other one, AMC, really pumped, and I think they got jammed into like sort of a mid-cap index or whatever, and it's kind of like, it's a bit unpleasant if you're sort of a mid-cap index investor and you just want sort of, you want sort of reasonable companies. Instead, you've had a bunch of stonks dumped on you.
Yeah, meme stocks that have just risen in. Even like Michael Saylor's MicroStrategy, because of the Bitcoin holdings, it can like just jump up and down, can't it, within the indexes?
Yeah, actually, that's such a fascinating one, because if you look at a long enough chart of that, you get to see kind of how the current, because often people say to me, it's crazier now than it was during the dot-com bubble. And actually a long chart of what's it called? MicroStrategy.
Because he's been going for a while, right?
Well, because he was a dot-com bubble stock to start with. Okay. And then he became, sort of did nothing for a good, 10 or 15 years, and then became basically a Bitcoin ETF. And you could look at that and kind of say, well, yeah, as crazy as Bitcoin is, it's not really as crazy as some of those dot-com stocks were. So.
Yeah, it's not repeating itself. It's just kind of echoing.
Yeah, it's interesting as well. I think even the crypto thing was interesting because during the real kind of bubbliness of the COVID market, in a way, like a lot of the crypto almost was, because when people would say, traditional investors would say, well, stocks are expensive, but they're not that crazy. And it's like, well, it's because there's this sort of escape valve that's crypto, where the kind of, the risky, the most risk-seeking money goes to crypto. So in a funny way, if crypto hadn't existed, maybe we would have seen the stock market get much bubblier. But there was sort of this, this
more extreme
pressure
version,
valve.
Yeah, well, you got like blue chip Bitcoin, as they call it, and then there's like pancake flip, there's like these crazy things that are doing 1,000 a day percentage or whatever. And there was some serious amount of risk being taken, wasn't there?
Yeah.
How come you never did any quantitative research into Bitcoin?
I've made a ton of videos that don't say that they're about Bitcoin, but they sort of are, because during the kind of really peak Bitcoin thing, if you were negative about it, like they'd all sort of pile into the comments and attack you, So you couldn't really say too much, but I made a number of videos just about kind of the history of money. Like I made a video about John Law, the man who invented paper money, which is a fascinating story. I made, the Ponzi video. I made videos about the sort of, what's it called? Essentially in the United States, it's actually perfectly legal to have your own form of money. They call it private money. And so I made a video about that because for quite a while in the United States, I think the smallest banknote that was made was maybe $1 or $5. I forget, but it was back then. That would have been a couple of weeks worth of income, right? So, in fact, the federal dollars were sort of used as savings in banks. But if you wanted to spend money, you needed something smaller than that, like to buy a newspaper with, and you just get basically a token from your local bank. And those things, the bank might go bust or whatever else, or if you moved, more than a certain distance from that bank, no one would accept it. But it was a fascinating thing. And so there's money, like both sides kind of have a little bit wrong in that maybe traditional finance people often think that money has always been what it has been forever, which is not at all true. Or they think it was just gold, but that's not really true either. Or then there's the kind of crypto people who think that they're doing something that's never been done before. But throughout human history, we've really worked out ways of sort of exchanging value with each other.
Tokenizing value.
Yeah.
Seashells and
well,
things.
Yeah, and that's even an interesting one because I lean on that as a version of, the proof of work thing with Bitcoin, because it used to take about a day to polish one of those beads out of a seashell, and therefore, if you were paid with one of those, you were really being paid with something that a lot of work had gone into and that wasn't easily counterfeited. And so there's all sorts of stuff. And even a lot of people often think that historically everything was barter, that you'd sort of go down to the store with a chicken and exchange it for a loaf of bread. But often it was much more favors, like where you'd sort of help your neighbor with something and they'd, provide you with some food from their farm or, something like that. And the world of kind of moving money around has been, it's complex, and it's always been complex, and it will continue to be. And that's why you can't rule out entirely the idea of, a functional version of non-government money, which, could be crypto. But equally, it's, there's a very interesting and complex history of that stuff. So
yeah, no, I just want to say thank you so much for your time.
Honestly, thank you for having me by.
Yeah, no, you're welcome anytime. Back to Maine. You are at work a manager of people. You're head of sales, right?
Head of sales. Get the title right, please. Yes.
Okay. How well do you think that your staff members, the people that you manage, understand their own personal finances?
Not very well. I mean, some of them even mentioned when we talk about the podcast, like, I need to watch that. I need to sort out my personal finances. I hear that all the time. Even though we work in finance, it's more the corporate side and investments and venture capital, so not personal finance.
If the professional finance people don't understand their personal finances, what chance do the rest of people have, right?
No chance. Everyone's screwed.
So this is a problem that I'm keen to try and fix. And the one way that I've come up with that is to go into businesses and provide financial guidance and coaching to the staff within the companies.
Decent. I'm not just saying that because you pay my podcast fees. I think it would have been really useful to me about 10 years ago. Still would be useful now, but it's a good start for anyone.
You wouldn't have listened.
No, I'd still be all in on some risky assets, I know.
Yeah, but I do enjoy the fact that you kiss my ass nowadays because I'm paying your bills.
Yes, boss.
But anyway, the things that we can offer, just to bring this to life a bit, is so I can come into a business and do talks. We can provide the guidance piece, and we'll do that supported by qualified financial advisors and relevant financial experts in whatever field. We can provide bespoke content as well, so this can be permanently stored within the business, and that could be, as an example, a tour of their workplace pension. Most people, 10% of staff don't opt out of the workplace pension, and then most of the staff, around 90%, never even log on to the thing. By improving that, by showing them how to do that and engage with it, that can have a massive impact long-term financially.
Sounds pretty sexy. I mean, I was one of the 90% that didn't look at my workplace pension, so yeah. How do people find out more or get involved?
They can email my co-founder, Will, and the email is will@getmost.co.uk.